This is an update for Thursday, February 22nd, 2018. And so I've been out for the last day and a half. I did execute a trade, I believe it was yesterday, but none later on in the afternoon or during the Asian session. So I'm back in the office now, full schedule. I don't have any other appointments for the rest of this week, so everything's good. For those of you who are aware, I'm sorry. So I had some doctor visits this week, just some testing, nothing, no big deal, just like regular routine. I try to do it a couple times a year. So anyway, all that's over with, and I had to go down to San Diego. So it's a kind of overnight thing. What we're looking at right now, though, I want to review one of some of the trades that I was executing over the last few trades, and there was a question, and I got this with coaching because I actually did it with some coaching students. It's a technique that I've been using for quite some time. I actually dropped a couple of videos into the membership area. That's what I'm referring to, the membership area, the full-size membership area, the real deal traders course, the whole magic trading model, and the 30-day shortcut, all of those combined. So I have a membership site where I have like the best trading courses that I put together. When I first put together a trading system to offer to my students in my chat room in 2007, I called it the Real Deal Traders Course. And it was actually something that I shipped to people's homes. And it worked. It was really, I mean, it worked out really well. It was all of my videos that basically described everything that I was doing. I broke down everything and I recorded a lot of live trades in the chat room at the same time. And you could see all of that sort of happening in those videos. And then a little while later, I developed the Magic Trading Model, which was really a coaching program where I threw in a lot more trader psychology into it and money management principles. So at first I was focusing in on just what I was doing because most of the people in my chat room, they would hear me call out my trades and then I would explain them on the screen, within the chat room with my charts, and then they wanted to follow along. So that's so you can see sort of the progression of why it's my trading courses have evolved. And then the last one that I recently, well, I guess you could say recently, it was a while back, a few years ago, but I put together a 30-day shortcut. So instead of dumping students into a big membership site with a lot of videos and a lot of different sections, I created a 30-day shortcut. And what that does is on the very first day that you get into the membership site, you know precisely what to do. It helps to eliminate all of that overwhelm material where you start chasing these different things. You start looking and watching these videos on indicators, but really you don't have the technique down yet. You know what I mean? You can get really lost in all of this information. Something might pique your interest as you're going through the list of all of the subjects. And it's easy to spend 2 or 3 days just doing that and still not even focusing in on what you should be doing first. So that's what the shortcut, 30-day shortcut does. It prevents all that. That's all inside of the membership area. So when I refer to the membership area, I'm talking about the big coaching membership area. So these videos are on this particular technique that I'm going to explain, and I'll give you a little background just in case you don't get into that, you're not in the membership area and you don't know what I'm talking about and you don't get to watch these videos. It's a technique that I use specifically on the CCI. So years ago, after I learned from John Bollinger how to select the proper indicators that so very often you'll see a trader and they will have like two or three indicators on a chart, right? And I did the same thing. I was always changing my indicators. I was changing the settings. I mean, every 15 minutes I was doing it. It was horrible. I didn't know what I was doing, but it looked pretty and it looked nice. But it wasn't helping me identify trades or go back and find any consistency with what I was doing. So through John Bollinger, I learned that very often you can select a couple or two or three indicators that are basically doing the same thing. They're the same type of indicator. They do the same thing. There are different types of indicators. They do different things. They will give you confirmation of different things. So that's what you really want. It's very often you'll see people that will have two indicators, and when they see a setup, they'll look at both indicators thinking, okay, now I've got two indicators giving me confirmation. But what they're really getting, and this is what John Bollinger was talking about, what they're really getting is double confirmation of the same thing. You want multiple forms of confirmation. Now, sometimes with some of my charts, I don't do it with all of them, but with some of my charts, to save time and space, depending on whether or not I'm trading on a laptop or something, I might have two indicators on the same chart that do the same thing, but I use one of those indicators for a 30-minute and the other indicator for the 1 hour time frame. So I know what I'm doing, but it might look weird if you see something like that. So just to explain, if you see that and it doesn't make any sense, and I just, you remember what I just said about having two different indicators that do two different things to give you multiple confirmation, you'll know why I do that. But I don't usually do that. But anyway, you get my point. So with this technique, the CCI, I really got into understanding the CCI and how it works, what it does, how what the whole principle behind the CCI is. I like it. It works really well for me. It's just what I like. Like I look at some of these other indicators and they're great indicators, but for some reason I just never really got into them. I would hear a lot of people talk about them in 2001 and 2002 in these chat rooms, and I would think, what are these guys talking about? Like, why are they so? They're just like huge advocates for certain indicators. They just have their favorite. So anyway, maybe that was what it was. I was kind of like the one guy that always wanted to do the opposite of what everybody else is doing. And in trading, I think that's actually a good thing. You really have to do things differently and stick to it if you're going to make it. So anyway, CCI in my research led me to find a group called Woody's CCI Club. And Woody's CCI Club, they're still around. They still have a website. And what they would do is these traders would take the charts and they would look at the CCI indicator like this. That was it. They just look at the CCI. And it drove me nuts because I had to see what price was doing. And I kid you not, they would literally get into trades based on where and how the CCI was moving, what direction it was pointing, what it was bouncing off of, the forms that it was taking. They were literally taking trades off of just the CCI. They would actually get in because it was doing something, and then they would take profits. And as I was trading with them and watching this happen and listening to them and watching the chat and everything, I would think to myself, how in the hell are they doing? Like, how do they do this? How could they be comfortable? I was so uncomfortable. Like, I was really nervous and uncomfortable about executing trades like that. But what it did was, and for some of them it worked. For me, it just didn't. I had to look at price. I needed to look at support and resistance. I needed to find profit targets on the chart, like psychological levels, things like that, extension targets of Fibonacci tools, all of that. I had to find that before I actually got into a trade and trusted just looking at one indicator. But through that process, I learned how to sort of combine these things into one like cohesive trading opportunity. So I'm going to explain a few things. For example, what I did on the pound dollar the other day when I executed this trade. So this trade, I'm sorry if I didn't mention it. It's called a CCI Ghost Pattern. It's a ghost pattern is what it's called. I think it was like it was written up in Active Trader magazine years ago. So it's not something new. I've been using it for a long time. I don't talk about it a whole lot because what I really don't want, or what I'm worried about, is that somebody who's going to get this system and then just start staring at the CCI and then start looking at it in a different way and won't use it the right way. So when I use this ghost pattern, I am extremely particular about using it. When I see it, very often if it doesn't look right, I just leave it alone. I won't mess around with it. But I'm constantly looking for clues here in price. I need to see what's going on. And I need some signals, right? Candle patterns are pretty strong. Obviously, if they're not used in the right place, like this reversal strong bearish candle on the dollar yen, I didn't sell that. It didn't look right. You got to wait a little while. You can see what's going on, especially if you're looking at, and then you step back and you look at the 1 hour, 4 hour, and the daily, which I do. But I'm not even going to get into that. There was reasons why I would expect price would top out up here or a little bit higher as opposed to there. And that is the use of additional technical tools. So it's going to take more work. It's not just as easy, to me, in my opinion, trading, as just sitting here staring at the CCI indicator and waiting for a pattern to set up and then taking a trade. To me, and this is what happened in that CCI room. So they had a lot of failed trades, but they were okay with their failed trades, like most traders eventually convince themselves to do. And I'm not saying that there's anything wrong with it. It's okay if that's how you want to do it. But for me, when I was putting together my trading system and I was starting my trading career, I would get mad if a trade didn't work and I didn't know why. Because if I couldn't figure out why it wasn't working, then I didn't want to use the trading system or the strategy. And that's what that was sort of the premise behind every trade that I executed when I put together my trading system, is that I need to find out why it doesn't work. I want to know why it doesn't work if I'm going to use a strategy. So when I would try some of these techniques and I was putting them together, the first technique was a continuation breakout trade. The next technique that I created was a Tech 1 trade. So if one of them didn't work, I needed to be able to go back and find out why it didn't work, or I wasn't going to move any further. To me, in my opinion, because I didn't know what I was doing at the time and I was slowly learning step by step, if it didn't work, then I was going to scrap it. But I had to stick with it for a while to make sure. But I needed to be able to go back and find out why. Same thing with this one. If it doesn't work, I want to know why it's not working. And the way I am able to improve the odds and to make it a better trade is to start using price levels, support and resistance, Fibonacci extension tools, all of that. And I'm going to show you how I did that. And again, it doesn't always line up where I can use all these tools and it's going to give me the correct answer. Sometimes I have to just pass it if things don't line up, and I have to wait a little while longer, even if there's price movement. Sometimes there's price movement, 20, 30, 40, 50, 60 pips up and down, and I can see where it's likely to go, but I can't see the exact pattern. Things don't line up for whatever reason, and I'm not going to get into the checklist of all these different reasons why it wouldn't line up right for me. You can just go through the trading system, and I'm sure you see the same thing. You've seen certain patterns, but you're not too sure about it. And the minute you're not too sure, stop. The minute that thought goes through your head, just stop. I say this all the time. And I also say that it's easy to say and harder to do, because I was in that situation and I know exactly what it's like. I would think, okay, well, it doesn't look right, but I couldn't stop because I was down so much money and I needed to make money and I had bills to pay and I had a family to take care of and everybody was waiting for me. So that put the pressure on me. And when I saw something I didn't understand, if I executed a trade, in almost every case, when I did that, it would be a failed trade anyway. And then all of a sudden, not only did I have a failed trade and I lost even more money, I also did something that I couldn't even qualify or quantify. I couldn't go back and like look at the data because I didn't understand what I was doing anyway. How was I going to know why it didn't work if I didn't even know what I was doing when I got in it? So just stick with the techniques that you know. And that is your challenge. That is just totally your challenge. If you have a little technique or maybe a few strategies that you're using that you know and are proven to work, but you're struggling to stick to the plan, you keep breaking the rules, then your number one focus isn't on looking for more setups. They're going to show up. They're going to come to you. You're going to get one. You're not going to get one every minute. You're not going to get one necessarily every day, but they will be there. You don't have to worry about that part. That part for sure, the market's going to give you another setup according to whatever system you're using. But the only thing that you need to focus on is your behavior. You need to become a master, dominate your thinking and control and drive. You need to totally control that. That's all within you. You own that. You can't direct price. You can't move price. You can't do anything about it. All you can do is just follow along, stalk it, hunt, and look for another trade. But it is in your discipline in the heat of the moment to be able to either make that decision to make money if everything lines up correctly, and you can sit back and comfortably say when you execute that trade that you did everything right and you know it. You feel it. You know it when you sit back in your chair, or if you're standing at a standing desk, you know what you did. You know you did the right thing, and that's what you need to repeat over and over and over again, as long as you got some kind of system that you know works in place. Otherwise, that's the whole focus. If you're breaking the rules, you've got to work on that only, in my opinion. So back to this. I'm sorry about the rant. I get the reason that I go to a lot of trader psychology, especially lately, the last maybe 6 months to a year now, I've really been harping on a lot of these rules over and over again because I see so much of it on Facebook and Twitter and the feedback that I get from coaching students. That is really the number one. Really intelligent people are in trying to trade and they're having a really hard time sticking to the rules. And what I've noticed is, and I've worked with doctors, lawyers, lots of professionals, people who own businesses, incredibly intelligent people. And what they're doing is they're used to controlling their environment. And there's nothing wrong with that. That's the way it works, right? If we don't take measures to control our environment, then everything around us is going to dominate, right? We're going to have to be underneath all of that. And that's not the way to control. That's not the way to succeed. So you can control the environment to optimize everything around you for you to succeed. There was something that I read years ago. I think it was like 2010, 2011 or something like that about Tiger Woods. I mean, doing the same thing. He was controlling his environment. Professionals do it, and there's nothing wrong with it. And that is what I see happen very often with professionals. They think that they can control by part of that thinking of controlling their environment. They're also it's almost in the back of their mind, they think that somehow they can control what's going on here in the chart on the screen, and that's where you need to separate yourself from that. Is that it doesn't matter what goes on here. I mean, it does, but as long as you have a system in place that works, you got to control yourself. So anyway, that's the reason I keep going back to all of this psychology in a lot of my discussions lately, is that that is what's holding everybody back, in my opinion, most of the people out there. And it's really bad because people are losing a lot of money as a result of that, not getting their thinking straight. And so on to the CCI Ghost Pattern. So as price is moving up, I start looking for a head and shoulders pattern in the chart. I'm sorry, in the CCI. So I want you to see what's going on here in price and where it topped out. I want you to see what's going on there first, but then we're going to roll it back and then look at the CCI indicator, and I'm going to show you where the head and shoulders pattern started, or how it developed. So here we have the left shoulder, the center tip, or I call it the IMP crown pattern, but it's a head and shoulders pattern anyway. And then it moves up again. So then we discount all of that. And we start looking again once it takes out that high. And we watch price. I watch price, but they don't, right? The CCI club guys, they don't do that. They just watch the CCI. So now we've got a new left shoulder, ahead, things like that. And then we're waiting for the right. Now it starts to bottom out. It starts to look like it makes some sense. At this point, I don't have that shoulder yet, but there it is. As that's forming, I then draw a line across that neckline, right? And wait for the CCI to cross through the neckline. And you'll notice up here in the corner let's go ahead and pull this down, what price is doing. It still looks like it's in an uptrend. So it's sort of counterintuitive, right? You see this uptrend and you still don't have confirmation. Very often I talk about not having confirmation of a high yet. But here in this instance with this pattern, you would sell it. You would sell it when price, or you would sell it when the CCI, when the CCI breaks that neckline. You're not necessarily worrying about price. That's how those woody CCI guys do it. When they see the CCI doing something, they execute a trade. They don't really care what price it's at. And then they close the trade based on what it does afterwards, watching the zero line rejection, watching the negative or the positive, and all that. There's different patterns for that too. But we're just talking about the ghost pattern in this video. Now, I did this with some coaching students during the Asian session. This is the dollar yen, and this is a 30-minute time frame. I don't mind, and I like using the ghost pattern, the CCI ghost pattern, on the 30-minute and the 1 hour, but I prefer to use it on the larger time frames as well. Now, I also use my technical tools to help me identify these trades, and I'm going to show you how I did that with the pound dollar the other day. It's going to make much more sense when you see how I combine certain things. So this is a very good trade, but it can be better. There was still, and again, as I said, when I was in that CCI club, there was still a percentage of trades that would lose, and they were okay with it. And they would just go right back at it. And I'm always looking to improve my trading system. That was my number one primary focus once I had it all put together, was now how to improve it, how to eliminate the losers. How some of it was just my discipline, right? That was most of it. But the other part of it was in the analysis, scientific approach to dissecting these trades and understanding why they didn't work, and documenting everything. I wrote everything down and I video journaled everything. So this is how I improve this. If this trade was going to fail, I want to go back in and I want to start using some of these Fibonacci levels. I'm going to show you how this one worked anyway. And I'm going to continue talking about this one and how I trade it. So on the way back down, if I'm going to sell it, right, with this ghost pattern, the next question you're probably thinking is, okay, well, where do you place your stop and where's your target? So on the way back down, if this is sitting up here at right around that 80, let's say that candle right there closes at 87, 107.87. If I'm getting in at that price, I'm going to target psychological levels. And I'm going to go back to why I do that. Why I do that in most cases when I target these psychological levels, the 50, the 20, the 80, and the 00. Those are the targets that I usually trade to. In this instance, I don't have a downswing, a price swing to the downside, an A, B to the downside. I don't have that in place to use my Fibonacci tool to identify the depth of the retracement at C, at the C level, and then to look for the extension target. Because I don't have that, if I'm going to, it doesn't mean that it won't come down, but if I'm going to trade it to the downside, I still need a target or I can't take the trade. So that's why I trade to those psychological levels. So if I'm getting in at, let's say 87 or close to 80, let's say if it was 81, obviously 80 is the next psychological level, but that's only 1 pip, 2 pips, 7 pips away. That doesn't make any sense. But there's plenty of room for this thing to drop down to the 50 level. So I would trade it to the 50 psychological level. And then the stop would be, you know, I would, if I got in at 87, I would try to use about a 20 to 25 pip stop. I would try to make it more than a 1-for-1 reward to risk ratio. But the reality is, and I remember because there's always the heated discussion about trades. You should always be looking for trades that are 2-for-1, but that's not always possible. I mean, it is not always possible. It can, I guess, depending on certain trading systems, but the way I do it and the way most people do it, it's really hard to find. And what tends to happen in a situation like that, if that's what you're finding yourself, if that's what you're seeing, is that as a result of not having a whole bunch of trades and just like letting them go because they're not, you know, 2-for-1s, you're just going to frustrate yourself because you're not making any money. All these trades are happening, and then you're going to end up just jumping in, right? Out of frustration, you're just going to jump in, and then that's probably going to cause a losing trade. I did it. Boris, and I'm going to chew up his last name, I always do, Schlossberg. He's been around for a long time. I really like him. Great analyst. I don't think he's that great a trader. He's a really great guy, really intelligent guy. I like Kathy Lean. I like their analysis. I listen to them. I read them. I always have, like for as long as they've been around. Back when Kathy was writing these weird little books and she had them, you know, hardback books. Anyway, great analysts. But anyway, back I think before he actually connected with Kathy Lean and they put together their little company, he was putting out a lot of videos, and this was like 2004 or 5 or something like that. And he was making videos talking about and addressing the issue of 2-for-1 versus 1-for-1. And he was saying very often, and he knows, I mean, he's been in the business for a long time, very often trades are 1-for-1. And he would repeatedly show his trades in his system and that they were 1-for-1, and it was really hard to find 2-for-1s and all that. So he was trying to help people sort of put that idea away. But be careful, right? Be careful. In this instance, this is an opportunity where if we're going to use this pattern and we've correctly identified why price could top out here using other tools, not just the CCI, then this could be a pretty good trade. Getting it at 87 or 85 or even 80 for that matter, and price reached a high of 90, well, that's a really small stop. We could put our stop just above that. Obviously not 1 pip above it or 2 pips. It's usually, in my opinion, at least 10 pips. I'd be prepared because there could be another spike to the upside and then it would drop back down. But let me show you what it did. It just sort of peaked out up there and then took a little while, bounced around. There's some of the retests, but it didn't go any higher. But sometimes it can, right? Sometimes it could just spike up a little bit. So you want to be prepared. Usually when I take a Tech 1 trade like this, now you'll notice some of the things that are happening here. Even when this pattern developed, the CCI Ghost, I could have used and waited for a Tech 1 trade. A Tech 1 trade is right here. Yes, it did not close more than 50 or 60% of the length of that last strong bullish candle, but it engulfed the previous one at this level, and there was an extension target up here, and it stopped almost right there at that level, price did, where I could expect this pullback. So everything lined up correctly on this trade. So let's continue on with what it actually did. So here's the 50 psychological level. So getting in before 80, 87, 85, 84, or waiting for that closed candle right there, that closed candle was 78. Either way, the first psychological level or target is 50. The next one is 20. I think it only went down to like 32 or something, 37, and a low of 33. And that was it. And then it stopped, and then it kind of pulled around, and I think it went back up again, kind of spiked up high. That spike low right there went to 28. So the next one would have been 20, but I would have been done with this trade. This is not something I would hold on to indefinitely, like for a couple of days. I wouldn't do it that way unless I was identifying this pattern on a 4 hour or a daily chart. Then you've got to change your stop at that point. But you've got to be honoring, the last highs and lows if you're going to execute a trade like this. This isn't like using a 55 pip stop loss, that kind of thing. You got to be really careful. But in many instances with this particular technique, because you're identifying tops and bottoms, I don't necessarily um, I don't suggest that you try to pick tops and bottoms unless you're adding a lot of technical tools to it, right? I talk about, and I have it in the membership course, John Bollinger's method and a few other guys that are teaching and explaining how to find tops and bottoms. We use the three pushes to a high, double bottoms, W bottoms. I use that, it's in my course material. So I use that with these patterns and these strategies, the IMP crown pattern, all of that. But I combine all of that with what I see here with this CCI Ghost pattern. I combine those tools with this to improve the chances of me avoiding getting into a trade where a lot of those CCI guys, if they would have taken that trade and would have failed, they would have gone, okay, well, on to the next one. And that's great. Yeah, you should be that way. But I want to be right 100% of the time. I know I can't be right 100% of the time. But again, that is my goal. Who cares? That's what I focus on. That's what makes me a better trader. I insist on trying to be right 100% of the time. Not insist that when I get into a trade, I'm right. I don't do that. What I'm talking about is the moment I decide to make that trade, I've done everything that I can according to the rules to make sure that I've gone through that checklist, that I've selected the right trade, and I'm doing the right thing. When I sit back after executing that trade, I need to have a level of confidence, and you need to feel it, right? You need to feel that you know you did the right thing. You can smile even if you see a slight retracement, and you know it's going to be okay. That's what I'm talking about. That's what I'm talking about. That kind of control. That's what it all comes down to. That's what it all comes down to. If you've got a trading system that you're using now and you're still executing and breaking the rules, if you know that you're breaking the rules, people will say that to me. I'm breaking the rules. I know that's what I'm doing. I'm breaking the rules. I just can't stick to it. I've lost so much money. I'm panicked. I'm angry. I'm breaking the rules. That's where all of your focus needs to go. It's on you. I can help. I've got a lot of different, strategies. That's what the new membership site's really built on, a lot of psychology. But anyway, that's really what it comes down to. I know that's what it is. I went through it, and everybody else is going through it that's making this mistake. We're all doing the same thing. And the only way to fix it is to dominate and control your thinking. There's exercises that you can go through, all of that. Anyway, I'm not going to get into that. I'm going to show you the technical trade for the Ghost. I'm going to show you now. I'm going to pause this and show you what it looked like the other day on the pound dollar. So we're looking at the pound dollar now. This is the 1 hour time frame. Now the first example of the CCI Ghost that I showed you was the dollar yen on the 30-minute time frame. Now I want you to see everything that's going on here. Okay, this is obviously a low from the 14th of February, a high up there, 16th, pulls back down, bounces around, really choppy in here. But nevertheless, we still see that consistent downtrend. So there's a few things that are going on here way before. This is the area where we got into that trade. You can see what I'm doing down here with the CCI. I'll show you that in just a moment. But I want to show you before how all of this ties together. Now, before, when price looked like this is, let's just say, as much information as we had, or even back over here. At this point, we had a new A low, right? One clean move all the way up, B high. Then we start looking for these possible retracement levels. There's a 382, bounces around, dips back down. You know what happened because I just showed you. So I won't waste your time there. But anyway, at this point, we have a new A high and a new B low. So I know that I'm looking for these patterns here in the CCI, but that's not my focus. My focus is here first, and then I can see what's going on in the CCI, right? That's how I do it. I would focus here on price. So I follow along, and I teach this other pattern, A, B, C, D price swing method. That's what I call it. I've always used it. I love it. I like it. It works for me. I use it everywhere, right? It doesn't always fit everywhere. That's the thing you got to remember. That's the way trading is. Your trade isn't always going to fit in every price, sort of the structure of the price, right? How it's bouncing around, moving around. It's not always going to fit, whether it's my technique or somebody else's. It doesn't always fit. You don't get a trade every minute, all the time, every currency pair. It doesn't work like that. Things move around. You have to wait for price to settle. Sometimes you have to stay out of the trade while price is moving and then just go, okay, well, wherever it's going, it's going to set up another trade for me. That's how I look at it sometimes when I miss some of those rallies and I can't tell why it's moving. If I can't tell why and I don't have a signal, then I'm just going to stay away from it. But eventually it's going to give me a signal. So here we have a new A high, B low. And then I immediately, once I have a confirmed B low, draw my Fibonacci tool. Love the Fibonacci tool, always used it. This is highly predictive in my opinion, happens all the time, especially on the larger time frames. I use it with Bitcoin dollar to detect where all of these highs and lows are. When it peaked out at 20,000, I had a psychological level there, even as it was going all the way through. Back when it broke out at last April, when it dropped down, I called a short it at 97, all the way down to the low of about 58. I think it bottomed at 58.30. And that was a psychological level. I'm sorry, a Fibonacci extension target that I explained as the entire thing progressed. I kept recording it. And then the bounce back up, we traded it from 70, 60 all the way back up to 10,400 and 10,900. And then, so anyway, and those were based on Fibonacci extension targets and a few other technical tools and the continuation breakout trade. Actually, there was the entry going back up at 70, 60 was a Tech 1 trade. But I explained that. There's a video there in the membership area where you can see the Tech 1 trade, which was a second entry opportunity after the breakout. Anyway, what I'm getting at is that I'm combining all these tools when I find these setups. It doesn't matter if it's the CCI that I'm looking for, that ghost pattern, or anything else. Continuation breakout trade, Tech 1 trade, all of it. I need to find why price is going to move, where it's at, the extension levels. I'm not going to get into the too much detail here with why these extension targets work. I talk about it a lot in my membership area where I'm talking about Fibonacci, the Fibonacci tool, but price is going to go on only so long in a given direction. The market's going to react collectively. That sentiment that you hear about that, all of that is going to happen and take place for so long. That's not going to continue to go on forever. Even when we see price inside of a tight range of consolidation, that's also market sentiment, market reaction, behavior. There's people either afraid to execute a trade or waiting for economic data or whatever. They're waiting for the catalyst that's going to cause that, whatever it is. So this detects that, in my opinion, if you do it right. The Fibonacci tool will find these extension targets and these possible support and resistance levels if you're using the tool on the right price swing. And it takes some practice and really getting to know how to use this tool to do it correctly. It is very, very possible to easily just throw up the Fibonacci tool and then think that you're looking at a price swing and you're not doing a whole lot of investigative work to find out if it is, or practice. And then you start looking for these extension targets and they don't work. And then you think, well, this doesn't work. And that's most people's opinions about why things don't work in trading anyway. If you're using it incorrectly and you don't have experience with it, or the things that are involved, it's not going to work. And then you're probably going to think this is just junk. It's not going to work. I did that. I didn't have enough experience in the beginning to use some of the tools I was using, and I thought they didn't work. And they're perfectly decent trading tools, technical tools. Anyway. So we've got A high, B low, 382, 50 retracement. The candle bodies are held below the 382, but there's a spike at 50. There's my extension target right there. And it sort of overlaps. Very often you'll see some convergence. I talk about convergence quite a bit. And this is a pretty important area. Support and resistance, remember I say this all the time, it's very often just a pocket or a range of support or resistance. It's not always an exact number. Sometimes it is, but it's not always. There's also a price swing high over here. So all of this is running right through here. And then we've also got right down here the 3,900 level. So there's a range of support in here. Easily probably going to gravitate towards that take profit level, but that's where I'm going to look for a bounce. So at that point, price here on the pound dollar drops. And it's pretty choppy in here. I mean, if you got in and tried to sell it and put a tight stop, you'd probably get stopped out, but it's still okay. It's still moving down there towards that extension target. It takes a while. There it is. Now it starts to settle on right down at this support low. Now let me put the crosshairs in here. And here was my extension target based on that price swing, that new downward A, B, C price swing. There's the D target right there where my crosshairs are. Notice what the candles are doing over there on the right. The candles, the bodies of the candles are staying above that support level. That's what I was watching as the head and shoulders pattern was developing right here in the CCI. You can see it. So as price looked like this and it was starting to approach that support, it looked like, hey, maybe we're going to get another continuation signal candle. Maybe it's going to drop all the way down here and take out that low. But this is what I was looking at, and this is why I called that trade. So again, back over here, as it was creating that spike low and support, possible support, these candles were all holding right there at that extension target. I say support isn't always an exact number. For the bodies of these candles to hold above it, it almost looks like an exact number, but but it's not. I mean, you get my point. Sometimes it does, sometimes it doesn't. Sometimes, price will bounce within 1 pip, but it looks almost perfect. But that doesn't always happen. But it does happen often enough to prepare for it and look for it. So be aware of it. Don't let it fool you. It still is what it is. That's support. So you'll notice that there's the head and shoulders pattern. The left, the head, the right shoulder. As price is cutting through that neckline, I'm going long. I'm trading this the opposite direction. It looked like it was going to drop, but I'm going long. So where I called this trade, I believe the entry was at 20, and then there was 2 take profit levels because I could see that this one was probably going to travel quite a bit. I mean, 60 pips wasn't going to be that hard for it to do if it was going to approach that price swing high. And this was also something else to consider. This also took place during the New York session. So the first trade that I showed you, that took place during the Asian session. And I executed that trade on the dollar yen. Well, it was more likely to move a little quicker, sorry about that, a little quicker than, let's say, and that is a more slow, in my opinion, a slower time to trade some of the others, the majors. But again, if we're trading the dollar yen during the Asian session, you would expect a little more activity there. For the most part, it doesn't guarantee it, doesn't mean that it's going to work that way, but you get my point. With this one, there's going to be a lot more. So I'm also looking for participation. I want to see more volume. I want to see more participation. I want to see the possibility of some economic data where traders are going to react to that news, and then it's more likely to move up to those targets. So that's also what I was looking at. I needed to make sure that I was trading in the right environment for something like this to work out. I didn't want to see it move up a little bit and then stall and come back down again, and then sit there and have to babysit the trade for a long time. I cannot always avoid that. Sometimes that's just a reality. I do have to babysit a trade if it just, whatever happens. I can't anticipate that. I can't expect that. And then things just go flat, right? It could be that the news wasn't any big deal or something. You get my point, but you've seen it. We've all been there. Sometimes you just can't control that. But again, that's all part of the game. We've got to have, structured discipline in our trading plan, but then still allow for some flexibility in case things start to change. But we're still disciplined. Anyway, the entry was at 20. And the first take profit level, again, psychological levels. Remember, just as in the first example, here, if I'm going to trade it back up, I don't have a new A, B, C price swing to use the Fibonacci tool to find an extension target to trade to. So I have to trade to these psychological levels. The 50 is a good one, and the 80 is a good one. So getting in at 20, using a stop down here, and the stop at that low was at 1.3904. So again, by using this method, we're actually using a relatively small stop loss. Like, this is really affordable. I think I even put the stop at 98 because I knew it wasn't. In that instance, I knew it wasn't going to go down. There was too much participation. News was already out and was already moving on its way. I mean, I could see all the volume coming back in. So I talk about volumes. I'm not talking about tick volume on MetaTrader. I'm talking about true futures volume. I'm looking at the dollar. So there's a whole other side to everything that I'm explaining to you here as far as multiple forms of or additional different types of confirmation, not the same thing, right? I'm looking at dollar futures. When I trade the Japanese, when I trade the dollar yen or the yen crosses, I'm looking at Japanese yen futures. I'm looking at other things that are going to help me gauge the strength, how likely it is that it's going to move with some force and cover some distance, or is it just going to stall out after about 12 or 13 or 14 pips and then go sideways? Because you can see that happening too if you time it right and you're looking at these other areas that will help you pinpoint what's going on in the market. I'll talk about those. I talk about how I set up my charts and things like that and what I look at in the membership area. So in this instance, the 50 and the 20, those are good targets. So let's go ahead and just take it out. And you'll notice that you can get in before the candle pattern, or you can improve it by waiting for a candle pattern, a Tech 1 trade. There's a small Tech 1 trade right there. Double bottom, tweezer little bottom. I've got the head and shoulders. I've got price bouncing off of this extension target. It overlapped with this retracement level here, Fibonacci retracement level, right there, creating a pocket of support. Economic data was out. Volume was back in. My ghost pattern was working perfectly. We were bouncing off support and I was trading it right within that price swing. Plenty of room for me to trade it. This ended up producing 60 pips if you traded it to the final target. 60 pips with about, let's say, a 25 pip stop loss. These are good trades. Now, let's take a look at this, the ghost up close. The ghost up close. You know what? If I click on this, I'm probably going to lose it. Let me pause this. All right, I just wanted to expand these charts so you can see what was going on here. There's my head and shoulders pattern. And you can see what's going on here with the price. We'll go right back over to... You can see how soon it actually develops before it actually finds a bottom, but there's usually a spike. I'm going to give you a little tip, but you have to be careful. I want you to go into the membership area to understand what I'm talking about here, but I am going to mention this briefly for those of you who are looking at it and probably thinking this. What does the CCI help? How can the CCI help? The Bollinger Bands. How can the Bollinger Bands help me as well? And I would be paying attention to the Bollinger Bands the way I do. I explain it, how I'm looking at the bottom patterns. But in this instance, there was a lot of consolidation, and I would have had to go to a larger time frame to identify what was going on here with price and the candles relative to the Bollinger Bands. So that's just to pique your interest. If you want to learn more about Bollinger Bands, go into the membership area or just go to John Bollinger's site. He's got a lot of free information about it. I'm a big fan, in case you haven't realized that, of John Bollinger and his Bollinger Bands. I like him. I like his. I just like him. I like him personally too. I mean, I think he's a really cool guy. He's very intelligent, but very realistic. A very realistic trader, and a lot of what he taught. It didn't give me my specific trading techniques and my entries and things like that, but the theories and the ideas and the concepts and what I took from his material really helped me as a trader. Like, it really focused me. It was a wonderful experience working with that guy. Anyway, but he's got a lot of material out there, and I highly recommend reading it and knowing that you're not necessarily going to walk away from the material that you read with a trading plan in hand, where you know exactly what to do when the market opens if you're going to read it over the weekend. It's not necessarily like that. Some of it is, but a lot of what I'm getting at was the understanding of trading, the psychology of trading, the reaction, and all of that is what really helped me. So anyway, that's how this trade works, and you'll notice that we can get away with a really small stop on these trades. And but again, I'm looking to improve the performance here. And like I said earlier, I see a lot of head and shoulders patterns in the CCI, but it's not doing anything here in price. So I just skip the head and shoulders pattern altogether. Be very, 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 and I mean very selective about using this strategy, just staring at the CCI and looking for head and shoulders patterns, because most of them are likely to fail if you don't understand it, first of all. And number two, there is a good percentage of them that are going to fail anyway, even if you're doing everything right. The Woody CCI guys, they accept that, but I wanted to improve it by incorporating as much possible, as much work as I possibly could put into this by identifying where it's likely to actually do everything that I'm expecting this pattern to generate for me. Now remember, as perfect as this was, where it bounced right off of that support low right there, next time it's not going to do that. It's not always going to bounce off like that. Sometimes I just can't find them, and that's okay. That's when I leave it alone.